So I'm here with Inmaculada from, you're a partner in
UHY,
Co?
yeah, UHY FAY Co. Yeah.
So in the legal and tax department?
Legal and tax, yeah.
Okay. So, yeah, I wanted to talk to you today about lots of taxes. Because we know in Spain that it can be quite complicated, particularly for non-resident sellers and non-resident buyers.
Sure.
So let's start off with the main taxes that you'll pay as a non-resident if you're purchasing a property and selling a property.
Yeah, okay. Considering you are non-resident of Spain, in the purchase, the taxes are very similar. You pay, or if the property you're purchasing is a brand new property, you normally pay VAT 10%.
Okay.
And then because you have to register property on your name, you need to pay, notary and register fees, and also what we call the stamp duty tax. If you're paying VAT, you pay also stamp duty tax.
Okay.
It's normally 1.5%.
Okay.
Now, if you are buying a second-hand property, then instead of paying VAT and stamp duty, you only pay transfer tax. Now, transfer tax depends on regions. So in Andalusia, for example, we used to have a very high rates, but 2 years ago, the government dropped down the rate. So right now, the transfer tax rate is 7%. It's a fixed rate of 7%.
Okay.
So you only pay that one. For purchasing.
Yeah.
For selling is different. If you're non-resident and you are selling a property, the first thing you have to bear in mind is that the buyer will retain or withhold the 3% of the purchase price or the sales price. Okay,
Yeah.
This is the first thing.
Yeah.
This doesn't mean that it's the final tax, because you as a seller can have whether a capital gain or a capital loss.
Yeah.
If you have a capital gain, then you pay taxes. As a non-resident, normally it's 19%.
Yeah.
If you are selling the property at a loss, then you don't pay taxes, but you cannot use those losses to offset any other capital gains that you may have in Spain, for example.
Okay.
Now, the capital gain, imagine that you have a capital gain and you pay 19%, but the buyer withhold you a very big amount of money, 3% of the purchase price. So it may happen that the money that he withhold is more than the amount that you have to pay. So this means that the tax authorities in Spain will refund you the difference between the amount that they withhold and the amount that is finally paid. Okay.
Yeah.
So this normally happens. Okay?
And that takes a bit of time.
Yeah, it takes time because the tax is payable within the 4 months after you sell the property.
Okay.
Okay, you can submit the tax at the beginning of this period or by the end of this period. So depending on the moment that you submit the tax, for example, if the tax is resulting a tax payable, even though the withholding, then most likely that you wait until the end of the period to submit the tax. But if the tax is a refundable amount, then the advisable thing is to submit it as soon as you can. Because tax authorities, when they have to refund something, they normally review. They normally carry out a very, not a very big review, but they normally review what you consider acquisition cost, what you consider to be sales price, what the expenses you deduct, and everything. Which is controversial sometimes, to be honest.
Yeah, I can imagine. And then, so that's your selling and your purchase costs.
Yeah.
What about ownership costs? So let's say your annual taxes.
Yeah.
Which you pay.
You pay, of course you pay because when you have a property in Spain, depending, and this has to do with the structure you use to buy, okay? Imagine that you buy on your own, you buy as an individual, as a person, and you buy a property for your personal use, vacation or wherever. The tax authorities in Spain will request what we call a deemed tax, which is based on the value of on the cadastral value or rateable value of the property. They consider that the income that this property should be generating is the 1.1% on that amount
Of the catastral value.
of the catastral value.
Okay, which is
And
always
that-
lower.
Yeah, it's
generally.
much more lower
Yeah.
than the market value.
Yeah.
So on that basis, that you calculate the income tax as non-resident, again 19%. If
Yeah.
you are an EU resident, okay, that's important because British are not so far in the EU, so
Yep.
they pay 24 instead of 19.
Yeah.
And this is a tax payable on a yearly basis. Normally, the deemed income tax is quite low because it's based on the rateable value.
Yeah.
So,
Yeah. So it's a presumption by the government that
Yeah.
you're renting the property.
yeah, exactly.
Okay.
Exactly.
So going back to that point about Brexit, which is very relevant to me because
Yeah.
I'm UK, and a lot of clients. So instead of paying 19%, you're considered non-EU
Non-EU, exactly.
because
They are non-EU.
they voted to not be part of the EU, and so they're going to pay 24%
Yeah.
tax.
24% is the standard rate for non-resident taxes in
Yeah.
Spain. 19% is applicable for EU resident income obtained in Spain.
Yeah.
And 19% is also the tax applicable to capital gains.
Okay.
So, and this is important because British, they will pay 24 on rental income, but 19 on capital gains. Because 19 is the rate for capital gains.
Yeah.
No matter if you are EU or non-EU.
Okay.
But for rental income, it makes a difference.
Okay. So it's only applicable to rental income.
Yeah, exactly.
Yeah. That you get clobbered with 5% more.
Yeah.
Yeah.
Yeah,
Okay.
basically, yes.